As we talk about 2018, it seemed like a tale of two markets. What stood out to you between the first half and the second half of 2018?
Well, certainly, at least in the second half, I guess I'd say, significant worries about global growth, about, the trade issue with China, just overwhelmed really what I think is an underlying good news, which, skipping to it, I think is a good reason to be a bit optimistic here for 2019. But again, we were kind of swamped. I guess I shouldn't leave out the Fed and worries about a Fed policy error.
Bill, as we talk about the first half of the year, it was a fear of rising interest rates that really took the markets down. In the second half of the year, we've seen those interest rates turn the other direction, 2.73%. We just looked at the last trade for the 10-year U.S. Treasury note. So which is it for 2019? A fear of higher rates or what lower rates might be signaling about the future of the U.S. economy?
I think it's going to be a bit more of struggling with what lower rates might signal for the economy, because I think that's where we're at right now, obviously, because the rates have come down quite a bit. I do think you're going to continue to have some sort of struggles. Hopefully, we'll see a little bit more from Chairman Powell at the end of this week, but in terms of perhaps some more worries about a Fed policy error. But if the Fed got the message to pause for a while, maybe we'll get a little respite from that, at least to start 2019.
Bill, do you expect that the markets will react in the same way to the Fed as they have in the latter part of 2018? And is the Fed going to react quite similarly to how they've done things for the past 6 months, or have they, quote unquote, learned a lesson?
Well, I hope they've learned some lesson, and I think it's been, as much as anything, a communications problem. I don't know that necessarily they learn any new lessons, because I do think they've been watching the yield curve. They're aware of things, at least the front end of the yield curve inverting. That does send a signal. So I think you saw it, that the Fed picked up on it. The markets might not have liked how Powell said some things in the last news conference, but then they quickly went back out and tried to fix that up a little bit, and I think they did a pretty good job with that. So I think that, at least, side of it was helpful. Again, we'll see what he says here at the end of this week. But I do think they've gotten the message to I guess, try and back off a little bit in terms of trying to say we'll have a bit of a pause here.
Bill, 2018 is a year that many bulls and stock market investors and traders want to forget. So can they look forward to what's going to happen in 2019? What's the outlook? Are things going to be positive? We've got a lot of tailwinds, but that doesn't mean the markets are going to respond positively to those.
Yeah, so I think two good things. So I think I've kind of said we're slowing but growing. So you're seeing the U.S. economy is probably slowing down from certainly something like 3.2% to something like 2.5%. That's still a positive, like you said, tailwind. I think the other great thing to look at is last week we got within a whisker of it being down 20%. We went back and looked at times when we went down 20% in the post-World War II era, and the numbers look great, frankly, even when we fell into recession, that 1 year later you had significantly positive returns. It was better if we didn't fall into recession. We don't think we're going into recession, so I think it is setting us up for at least the odds being well in our favor to have a good year next year.
All right, so a good year, no real recession in your mind. Where are the opportunities given what the market has given us over the course of the past 3 months?
So I think it comes together because the market's so worried about global growth. I think you have to go to a little bit more cyclical side of the world. We like consumer discretionary. We like, even though I have to, catch my breath before I say it, energy a bit. That's been a tough spot, to say the least. And then I think last piece, technology. It's been beaten up quite a bit, but again, it has a cyclical component to it. So I think those are some opportunity spots.
Bill, you mentioned the yield curve before. How important are the financials, the banks, to the upside thesis for the markets in 2019?
Well, at least having some stabilization in the banks would be good. I'm certainly not worried about the capital side of things. They've certainly suffered with the worries that we wouldn't see as many rate hikes. Financials are a large component of the S&P, so it matters. But I think they've gotten wiped out pretty hard. I'm not ready to say it's time to go shopping too much there, but I do think it is another spot that's been beaten up, so I don't know that you'll necessarily, maybe that sets us up for a better year next year as well.